I'm Warwick Slow, and I'm the host of the Kiwi Advisor Network podcast. Today's episode is with Johan Fritz from Leapway Financial Consultants. It was a really good interview. He jumps into a lot of detail about how he brought in a new business partner to complement his strengths and weaknesses, as well as jumping into automations he's built into his process to make his life easier and to give his clients constant communication throughout the advice process. It's a really good listen. If you've listened to this episode or previous episodes and you've got value from them, please share them with other people who might get some useful insight, because it helps us grow. The more listeners we have, the more we can invest into the podcast and the better we can make it. So enjoy the episode. Cheers. Welcome to the Kiwi Advisor Network podcast. I am the host, Warwick Slow, and very happy to be joined today by Johan Fritz from Leapway Financial Consulting. You've come all the way from the shore out to East Auckland to join us here. Thanks for coming, and it's so good to see you in the flesh.
Yeah, thanks for having me, mate. It's been quite a bit of a drive, and it's actually all the way from Ariwa, so a little bit more up.
Even further.
Yeah, even further.
Now, you've got a bit of an accent. You've grown up outside of New Zealand, and you've moved here. I think that's a good place to start, because it's such an interesting journey about how you got set up. So tell us about your transition from, is it South Africa, right?
Yeah.
Yep, to New Zealand.
Yeah. So in 2016, we actually decided to jump ship and move away from South Africa. I think most people will be familiar with the South African situation and why people are moving from South Africa to other countries. So we chose New Zealand, or New Zealand actually chose us, and we moved across. And I actually found the move quite easy. I think that the Kiwi culture and the New Zealand culture is very, especially in Auckland, very welcoming, and also very very open to people coming to Auckland, for instance. And in Auckland, you're not an expat, you're just an Aucklander. So when coming over, it's obviously challenging to start out in a new country, and the challenges of actually coming into the business itself is completely different. I think there are a lot of people that are just in the banking industry and in the insurance industry in New Zealand will take that for granted, and will actually just be like, it's just what it is. But there's quite a bit of a difference between the financial services, especially South African financial services environment and the New Zealand environment. Regulatory-wise, obviously, South Africa is a lot more regulated, and I have effectively been a financial advisor my whole career, so there's been no other jobs. And the journey was, as always, an enjoyable one, and we definitely felt the actual move itself was an adventure for both myself and Lausanne. But the business side is obviously something we'll chat about a little bit more. But it was obviously from a move from South Africa to New Zealand, we had quite a bit of challenges, and it's been a journey.
And you talk about the regulation being, maybe a bit more harsh in South Africa. What are some things that you could maybe foresee New Zealand implementing that you've already maybe experienced in South Africa? Yeah,
absolutely. So, I mean, for instance, the Level 5 certificate, that's actually something that's been implemented in South Africa quite a long time ago. So if you wanted to become a financial advisor, you needed to have the qualification first and foremost, but you also needed to do what is referred to as a regulatory exam. So you would actually need to be or partake in the examination that's hosted or regulated by the Financial Services Board in South Africa. So I think the things that we've had happen there were market leading. So obviously the regulation changes we're experiencing within New Zealand is something that I'm very used to, and having a license and being part of a license is exactly what we operated under. So there's no difference from what we're going through at this stage. The difference for me is at this stage, I am the head of that. So I'm implementing the policies and making the changes to get the license running. Whereas when I was in South Africa, I started out as a tied advisor, and started out in 2012 and became an advisor, which effectively is what they refer to as an academy model. So they actually have academy models that teach you how to become an advisor, and it's pretty cool. But once we moved through the different stages of being an advisor, I realized that I want to represent the client, and being a tied advisor just really didn't feel like I was representing the client at that stage.
You mentioned some challenges that you faced when you were moving to New Zealand. Like, what are some of the challenges that some immigrants will face moving into the New Zealand market, not only just for the country, but financial services? What advice would you have?
Yes, I mean, I think that in South Africa, I predominantly gave advice on insurance investments and retirement planning. So coming to the New Zealand market, straight away, the market's much smaller. So the insurance is very different. The product base is also very different. And I think the challenges on the financial services is that one thing that was quite a shock to me is the fact that we have a predominant age-rated insurance premium market. So meaning that back in South Africa, the bulk of premiums are actually sold on a level premium, and you would only use an age-rated premium when required. So if it was linked to debt, which we know is a decreasing risk over time, we would use an age-rated premium, and the rest of the covers would be set up on level premiums. So it's much more sustainable. So coming into that New Zealand market, you have to really quickly school yourself on the products and why they're designed the way they are. And then obviously you have your cultural changes that also come around. We can communicate in English, but effectively there are certain words that we use in our South African English that's just not applicable to New Zealand. Like, for instance, we would refer to a piece of gum as a chappy. And so you would come to New Zealand and you'd go, well, can I have a chappy? And then people are like, what? You mean the movie? So those little things that you sort of start to pick up, and there's heaps of those examples. But on the financial services side of it, I think that the bulk of the challenge was more about really upskilling yourself around the products in New Zealand, how they work, all the built-in benefits, especially on insurance. And then taking the jump, actually incorporating the mortgage and the lending space of the New Zealand market, which I find very fascinating. So obviously with me only having the insurance and investments background, seeing the mortgage broker space in the New Zealand market was something that I definitely looked at as a really good opportunity, because there's actually a very big portion of a client's portfolio that you can help them prepare for, let's say, the retirement, or making sure that debts are paid off and so forth. So yeah, there were challenges, but overall I think that the financial services principles are the same. So insurance operate the same. It's just the products and the detail of the products.
So you started and you were doing insurance and investments, and then so you started your business, which is Leapway Financial Consultancy. You added mortgages at a later time. How did you have a mentor that you worked with, or how did you kind of get up to speed with the products? And
Yeah. I mean, actually, so Leapway Financial Consultants, just as a brief rundown, is a multidisciplinary financial advice firm or financial consultancy firm. The business itself was actually started in 2007. So even though I came over at a later stage, it was a business that I acquired over a period of time. When I joined the business initially, it was predominantly insurance, and then having the investment background and wealth planning background, there was always the vision to add in the other portions of the advice, because I just felt that only giving advice on one product and a siloed approach is very difficult from my viewpoint. So from what we've set up at the moment, Leapway Financial Consultants has the ability to operate at what we refer to as a consultancy level or a financial planning level, which is our high-level product or service called lifetime cash flow modeling. The consultancy piece comes in because that's a fee-based service. So lifetime cash flow modeling helps the client identify the accumulation of funds towards retirement, and then also whether that's sustainable going into retirement given their current expenditure. They can also make an adjusted expenditure. So I'm going off on a bit of a rant on or banter around the mortgage piece, but as we were doing the insurance planning piece, we slowly added on the investment or the KiwiSaver side of things. And then when I actually decided to add on the mortgage piece, I slowly observed some of the other advisors, started learning from what they're doing. And I had an individual, Graham Clark, who was national sales manager at that stage for Mortgage Link, who was my mentor. He was the individual that actually guided me around how to package the application. And so he had lending experience, and obviously at that stage he was the national sales manager for Mortgage Link. So he helped me quite a bit around understanding the principles of lending. So the 3 principles of lending, or the tripod of lending, is applicable to any lending, irrespective of it being home loans, business loans, asset finance, and that's obviously its cost, collateral, and the character of the individual. So we spoke a lot about that when packaging the application. So he didn't really just focus on teaching me how to package the application, but really taught me around how to look at the application as an assessor would. And then I made the decision to join Trail, which I think was a phenomenal one. So this is a while back, so it was very, very early days, because I felt that Trail actually allowed me the benefit of actually packaging the application using the software. So the software would actually prompt me on documents required. So as an inexperienced mortgage advisor at that stage, really understanding the 3 C's of lending and that lending tripod that needed to really be explained to the assessor and the diary note. But the software itself actually helped a lot with giving me guidance on which documents were needed. So if for instance, we said self-employed, we got 2 years financials as a document. If we said salaried, we got pay as you earn. And the same with first-time buyers. We'd have the IRD summary to potentially see if the client qualifies for the Homestart grants and so forth. And so the software actually helped me quite a bit with the mortgage piece and how to get that rolled out into the company. It took me a full 16 months before I was feeling comfortable enough to really go to my clients and offer the advice. In that time, I did have clients already ask me and push to go, hey, you've got a good understanding of this. Can you please help with the mortgage advice as well? So we had the market. We just needed to really get the skills and give the clients quality advice, because that's what it's all about. So yeah, it was a slow process for us, but I think it definitely one that's been very beneficial to the company, because it is one of the siloed products that we actually use in our clients' full financial planning portfolio.
Yeah, it falls into, when a client comes to see you. I remember Jeff Royal, we did a great podcast episode with him, and he talked about doing, you've effectively paid for the lead to come into the front door for insurance or investments or whatever way they've come in. Why not do other services on top of it as well? And I want to just do a bit of a deep dive into how you charge a fee to your clients. I know a lot of advisors ask me about it. I saw there was a poll on the NZ Advisor Community Facebook page about some legislation that might remove commission for advisors. And there was a poll saying, like, if that to be the case, how would you be remunerated moving forward? So how do you structure your fees at the moment?
Yeah, so it's a good question. So we designed and implemented the lifetime cash flow modeling service, or as we refer LCM, as a fee-based service. And effectively, we actually have a terms of engagement with the client upfront. There's no push for product. It is it's a product that stands on its own, or a service that stands on its own, and it's a high-level financial advice service that we offer. Any of the other advice pieces that we offer, we refer to as product advice or siloed advice, which is then tying into the mortgage, insurance, and investment pieces, because then we're now going down the silo and focusing 100% on that product. So when we implemented lifetime cash flow modeling, we thought a lot about the fee structures and how to actually push this into the market. A big obstacle for us was us not necessarily valuing the advice or the offer that we have enough, until we actually started showing it to people and they went like, this is gold, this is really good. Having that ability to see their world as it is at this stage, and whether they're on track for retirement, and then getting that snapshot of, okay, well, I need to do a few different things, and we're able to play around with scenarios and literally model out the client's financial plan leading into the future, whether that's investment properties, businesses, dividends being paid out from a company. We can literally use any financial tool because there's no push for product. It's a freestanding service. And so then we actually came back and into the office, and myself and Matt actually sat down and really put our heads together around the fee structures. And effectively we came up with $12.50. It includes, it's based on $250 an hour. So that's the hourly charge. And we have 2 sessions with the client. And the terms of engagement is sent out. Once the terms of engagements are accepted, we invoice the client, they pay the invoice, we do the reporting, and we finalize the scenarios with the client. And so the second appointment is then actually showing them the reality of the scenarios that they have in mind. So whether that's buying an investment property, subdividing a property, paying off their current mortgage, and how that affects their yield of their investment properties, or whatever the case might be. That's pretty much how we get it done.
And how do you communicate the advice or that longer term vision so that the client really understands it?
I think the difference with Leapway Financial Consultants is that we actually lead with it. So when we operate as a financial consultant, and the need for it also being referred to as a financial consultancy firm was because we're fee-based. And so when we talk to our clients, it is all about, we'll really help you to see where you're heading. So you've got one investment property, you've got the business, you've got the salary and a bit of dividends coming out. But what is it realistically showing you? Where you're heading? Are you actually heading to a sustainable retirement? What is your goal? What is retirement? Is that 65 or is it 50? Is it 55? Because retirement in a lot of people's eyes just automatically revert back to, well, that's the age of 65. But when you talk to an advisor at an early enough stage, that could potentially be completely different. That can be 55, that can be 50. It's only being financially independent, meaning that you're not dependent on an institution to pay you funds. You've accumulated enough to sustain yourself. So when we talk to our clients, especially on the lifetime cash flow modeling service that we offer, it's all about actually looking at, this is our high level service, this is our professional service that we offer, and we will be giving you this advice without any push for a product. I'm not pushing you into selling an insurance or buying an insurance. I'm not pushing you to take out a home loan. You do not need to open an investment fund after the discussion with us. The reality is that obviously they do, because they've gotten this holistic report and service, and from the back of that they choose to actually implement it with us. So it is actually our difference. That's what we offer in the market that puts us apart from some of the other advisors.
So I lurk in a community that's called FIRE. It's Financial Independence, Retire Early. And the whole idea is, I read some of the stories and people just kill themselves working their butt off really early so they can retire at 40, 45. Do you have any stories of people maybe clocking off at an earlier age than 65?
Yeah. So absolutely. I think one of the things that we actually do talk to our clients about, and one of the core values and vision of Leapway Financial Consultants is around sustainability and balance. So we have a saying that says wealth, health, prosperity, or health, wealth, prosperity. It doesn't matter in which order you put it. And you 100% saying that people actually push so hard for the financial side that they forget about the health side. And I think the Dalai Lama said that he doesn't understand that when people are young, they sacrifice their health for wealth, and when they're older, they sacrifice their wealth for health. And so in that saying, when we talk to our clients, and the benefit of the lifetime cash flow modeling service is that we don't push them into actually just focusing on the financial piece. It's around, okay, we'll do this, we'll identify a surplus, but this is after you've actually expended and put all your entertainment on and all the actual things that you enjoy doing. So it's not putting them in that box saying, hey, you just got to focus on the financial piece. So 100%, there are quite a few stories of people that burn out just focusing on the accumulation of the financial piece, but that's not what it's all about. It's really about that balance of, okay, I have enough to make sure that I don't have this risk that I can't retire. I don't have sufficient funds. I haven't accumulated assets or savings, allowing me to actually live into my golden years and enjoying the hard work that I've put in. So yeah, it might not be retiring at 45, because I'm pretty sure you'll you'll burn out unless you've really had a good company that you sold off of some sort. But if you're accumulating funds, it's all about sustainability. It's a marathon. It's not a sprint. So having that goal initially, and then having the reality checks of where you're heading, will also offer you the ability to see that I'm on track. So I can relax. I can just keep on doing what I'm doing at the moment. And if I'm doing too much, and I see that this is actually taking a toll on my health, I'm able to dial back and go, okay, if I make the following changes, how would my retirement look? How would the golden years actually look if I made these changes? And is that acceptable? And if the answer is yes, then you can actually dial it back and prioritize the health piece.
Because I was listening to a motivational speaker last week, and they spoke to people who were at the end of their lives, shall I say?
Yeah.
And the common theme was that they all regretted not spending more time with their family and loved ones.
Yeah.
And, a lot of people push too hard in those earlier stages, and just communicating that you don't have to have everything right now, it's a marathon. How do you have like a graph that you present to them? How do you show that longer term vision?
Yeah, I mean, I think a good reality check for people is to have a look at financial life stages and the norm of financial life stages. So if you're starting out a family, you will have high levels of debt and high levels of required insurance and so forth. So when we work with clients, that normal life stage is a very good way to show them where they're heading, but it's completely customizable, and it should be customized to the client. And that means that graph that you're referring to is also customized to the individual. It's not something that you can just use as a generic one. So effectively, the lifetime cash flow modeling graph itself will show you that. Will show you where you've purchased the property, where you've sold the property, and those spikes in your lifetime cash flow would actually reflect it. And that obviously gives you the ability to show a client what their future will look like.
I want to jump into how you do prospecting. How do clients find you? What is that first conversation? Do you do email marketing? Do you go to conferences? How do you bring new business in?
Yeah. That's a awesome question, and there's a bit behind it. So when I was the only advisor in Leapway Financial Consultants, I relied heavily off of word of mouth, and to be honest, prospecting and networking is not my strong point. So we had a few changes in the company, and I'm super excited to be able to announce actually that I have a new individual that's part of me, and you would have heard me referred to him previously.
Matt.
So Matt, is actually someone that you introduced me to. So it's good to catch up, and that was a great introduction. And he's come on as head of new business, and I'll be stepping a little bit back into head of operations. And so how we've actually set up the business is that we've identified specific centers of influence. Because of the way that we offer our service, we have the ability to go talk to other professionals, the likes of solicitors, accountants, and so forth. And we have set a few agreements, and these agreements effectively feed us. And so we are the trusted source of financial advice to these other professional firms. And so far that's really worked out for us. So yes, we don't do any digital marketing. We don't. We've dabbled a little bit with Google AdWords in the past, but yeah, the rest of it is actually now from other professional firms. And off the back of what they've done, we will usually have some financial transactions that need to be taken care of, whether that's solicitors that need the buy and sell agreement, whether that's the accountancy firm that's talking to a self-employed individual that's looking at ACC and Cover Plus Extra, which potentially needs the ACC dial down, which can be utilized towards full insurance that covers both illnesses and injuries. And these are the things that Matt brought to the table, the wealth and the experience and knowledge that he's bringing to the company around the business planning and the business insurance pieces really helped us and put us in a position to go show other financial professionals and legal professionals that, hey, this is what we're doing with clients. And the feedback that we're getting to date is that this is pretty amazing, and I think this is the future. And so then we're able to go, okay, well, we want to work closer with you and we want to take care of all your clients, and that's just a normal, natural discussion, and it happens that it's working really well for us.
Okay, I want to quickly find out how do you build those relationships with the service providers, like, you know, solicitor, for instance? Do you just knock on the door and say, hey, this is what I'm about? Do you want to?
Yeah. So the current relationships that we've got on the company were existing relationships, and most of the ones that we have were also providers of services for us. So, for instance, the legal firm that we have in our scope and in our vision that we're busy working on, we're actually the commercial solicitors that offer our legal services. So we have that relationship already. They know us, we know them, we know the level of service that they're offering. And on, for instance, the accounting side of things, there was a very strong relationship from Matt's point of view with the accountancy firm. And because that's our niche, we've now actually made it a point, and specifically around Matt's interactions with accountants and accountancy firms, we try and get closer to them. We really try and firstly build the relationship. So it's not business first, it's relationship first. So the moment we've got the relationship, then we can actually sit down with these firms and actually say, hey, let's talk about a business, because we want the certainty that their service level is the same as ours, and we want to actually be able to go, okay, well, we agree with the values that you have, and our values and the values of the specific firm, whether that be accountancy or legal, is in line with Leapway's values, and that means that we'll have the same sort of clientele, and we'll be able to actually offer the service that their clients are expecting, and vice versa.
And let's say, I know you said that some of those arrangements were legacy relationships. What advice would you have to maybe someone who doesn't have that legacy arrangement in place and they want to? You just offer them a game of golf? Like, how do you do it?
Yeah. So I mean, one of the big things is that that's actually a question for Matt.
Yeah.
So with
get him on the phone.
Yeah. with him being head of new business, that's 100% his territory. And I have to say, he's amazing at it. He's a natural marketer. So he just, I think, in a lot of instances, just naturally get on with these individuals. And that's the opportunity I identified with working closer with him. And I'm the individual that sits behind the scenes, that really runs the operations, that makes sure that the compliance, the governance, the back office systems, I'm loving my systems and CRMs and so forth. So we actually did something which was very, very eye-opening and intriguing, which is called Clifton Strengths. And Clifton Strengths effectively identify your strengths, and it highlights the 10 strengths that are the strongest, and then actually focuses on the 5 strengths. So when we decided to work together, Matt and myself, we actually did the Clifton Strengths reports. We looked at the reports and where we had synergies, and where we could actually help each other in the business. And we also had an individual, Jason Biggs, who's a Clifton Strengths coach, come in.
Not the actor from American Pie.
No, not him. And when I was telling Liz on, we had Jason Biggs, and she's like, he's an actor. I'm like, I don't know actors' names. So no, that's not the same one.
He's had a career shift, like American Pie.
Yeah. So we had him come into the office. He predominantly worked with corporates, but that was such a good session. So he actually looked at my 5 strengths and really identified where I'm good in the business, and then looked at Matt's 5 strengths and where he will be good. And so what we've done is we've put each individual in the business in a space that they're, number 1, in line with their strengths. So it means that number 2, they'll enjoy doing what they're doing and they'll be very good at it. And the whole philosophy around Clifton Strengths is that forget about your weaknesses. Even if you try and make your weaknesses better, you will never be as good as someone that just has that as a natural strength. So with that, we really identified that, hey, and we actually knew this from the beginning, just with myself and Matt having some chats, is that he'll be very, very good at getting these relationships on board for us. And I'll be behind the scenes making sure that whatever we do within the relationships and the transactions are brought home and that we get it across the line, so that we obviously keep the relationship going really well.
How do you do the Clifton test?
So it's online. It's like
Google it.
Yeah. Clifton Strengths is it's a standardized strengths test. So you just Google it. It's like heaps of questions. And so you got to go, there's a statement, and then you go, either you
strongly disagree or...
Yeah, not exactly. That's actually the norm. These are a bit different. So it would put a statement there, but then it would have two separate statements on the left and right-hand side. And so you've got to click on the main statement, how you would actually lean towards it. So an example would be if someone's struggling with something, I would help them, or I would actually ask someone else to help them. Effectively what these strength tests do is it starts to really mold and identify where you would be best at working with your specific strengths. But it's quite a few. It's over 100 questions, so it takes a while to go through it. And we're actually bringing it into the business going forward. So each and every new individual that's joining the Leapway Financial Consultants team we'll be doing the Clifton Strengths test, so that we know that if we're using them in a specific role, this aligns with their strengths, and it also makes their job more fulfilling. And at the moment we're actually recruiting for our first insurance administrators. So immediately when they come on board, we'll be doing it to make sure that we're also not putting them in a position where we're judging a fish on its ability to climb a tree. We want to put the fish in the water. We want to get them thriving and put them in a working environment where they're really enjoying their job and they're able to get better at it.
I love that, because having a business partner that complements you, that must be quite hard to find. As you're running Leapway, you're probably wearing a lot of hats.
Yep.
How did the decision come about to bring in somebody else as a business partner?
Yeah. So the thought process really started when you start going through the whole business, as you say, with these multiple hats that you're wearing. You got to be with clients, then you got to get the governance in order, then you need to make sure that the compliance is okay, and this is the normal and the same issues other financial advisors and businesses have, is that they need to put on all these hats and they're not really giving their best on each specific section. And so I needed to make a decision around where the company will be going. And at that stage, obviously, having full ownership of it, you need to decide, well, do I want 100% ownership of something that's, I would say, good? Or would you like a smaller percentage of something that's great? And that's where my thought process started to really go down the track of, I would really like something that's great. I want to have a business that's done with someone that, as you say, complements you, which means that you're not working against each other, you're actually complementing each other on your daily activities, which means that individual feels like they can't live without you and you can't live without them, because each one has a role in the business. And so that thought process really ramped up after I met Matt, and I started thinking of, okay, well, where are we going? What is the next phase for the company? And you've just got to be very honest with yourself of where you're not that strong, where you don't have the strengths. And I've always been very open to myself about knowing that I'm not a sales individual. Funny enough, that I'm in this industry that requires you to sell specific products. But I've always been of the opinion that I'm educating the client to the point that they're buying. So it's not just selling the product. And we're still doing that. So when sitting down with, or when I sat down with Matt, there was definitely immediate a synergy around. I could just see him naturally market and naturally move around. And so we actually had a meeting at the coffee club in Oriwa. And after the meeting, we got up and he said, "Hey, I want to have a quick chat with this guy. He's an auctioneer at one of the real estate agencies there." And I'm like, "Do you know him?" I'm like, "No, I'm just going to introduce myself and I want to have a quick chat with him." And immediately I saw the opportunity there that this is definitely something that the business needs. We need an individual that's able to move around, that can actually talk to people. And it's not there with an ulterior motive. It's there to really just talk to them and network with them and to get them to get to know them on a really personal level and have that relationship. And then the business comes from itself.
Those conversations are so crucial. I was at a conference last week, and one of the guest speakers said, "Okay, for the next 3 minutes, you're going to get up and you're going to go to somewhere else in the room and you're going to talk to somebody or you're going to talk to as many people as you can in that time period and find out how many things you have in common.
Yeah.
And when she said it, I went, oh,
really?
But just taking that first step and introducing yourself to somebody, it's so much easier.
It is. It is. And the thing that you need to be conscious about with those feelings and that discussion that you have is that for some people that just comes naturally. They go, stand up, go talk to someone for 3 or 4 minutes. They go, great, I'll get it done. For someone else, that's a major challenge. That's effectively their weakness. So one of the things that I got from the Clifton Strength Report is that my number one strength is relator, which effectively means that I can relate to someone, but it's all about quality over quantity. So I don't necessarily need hundreds of connections. I need 4 or 5, but they need to be meaningful. I want to know everything about those individuals. I want to know where they're at in their life, and I want to know details of how their life's going and all those type of things. So we identified with that is, for instance, if you put me in that room and you say, go talk to someone for 3 minutes, for me, that's nerve-wracking. I really don't enjoy it. So as you say, that first meeting is something that I find very, very challenging. And in the business, what we've done is relators work really well with a warm introduction. So if you give them a warm lead, they'll run with it. Because I don't need to introduce myself. You already know who we are. You know who Leapway Financial Consultants are. You know what we do. You know the services that we offer. So effectively, you're already in motion. There's momentum. And so if you can pick that up as a warm lead, that obviously means that you can straight away start building a relationship and you feel more natural with it. But putting me in that position, as you say, where someone just says, hey, go stand up and go talk to someone, for me, that's super challenging. And I've actually found this in the gym, and it's actually a weak spot of the specific strength, is that what you also tend to do is you actually talk to specific individuals that you know really well. And I picked this up in the gym in the morning. I would have individuals that I know their name, I know they're vegan, I've got this, I've got that, I've got all the details of their life. And I would tend to actually speak to these individuals every morning when I get to the gym, and I noticed that when you do that, one of your weak points is that you can actually come off as quite rude, because you seem to be talking to a lot to these specific individuals, but you're excluding others. So for me, that was also an eye-opener to go, okay, well, once you've got these relationships, be open to the other relationships and networking. So I think that was quite eye-opening, but it is, as you say, it's just getting going, and everybody's a stranger at some stage. So once you've introduced yourself and you start to get to know each other, then the relationship is growing. But we all got to meet someone at some stage. So
I imagine some of those people at the gym as well, they're probably having that same internal battle, talking to the same people each day, and they probably recognize you.
Yeah.
I should chat to that guy.
I think so, definitely. I think that some people actually, you can see individuals and obviously from how they're interacting with other people as potentially extroverts. We were quickly chatting about this outside, is when you're an extrovert, you talk to a lot of people. When you're an introvert, you've got the specific individuals that you talk to and you feel comfortable with. So moving around in the gym, you can also see individuals that actually do talk to everyone, and then you've got the specific ones that actually get stuck and they're just having a good chat, which isn't the ideal time to be doing it, because we're there to get a workout done. So you actually want to keep the momentum. You want to get the workout done, and you want to get out of the gym. But it's obviously the extrovert introvert example.
When you get dragged along to a party with a friend or maybe a partner, and you don't know anybody there.
Yep.
And then you recognize someone, you're like, I'm going to latch onto you for a bit. It's just
yeah, absolutely. I think it's again, it's obviously coming down to where you naturally thrive, and being open and honest about that. So bringing it back to the business, if you know you're that individual that goes to a party and you're struggling to make the connections, then you need to be brutally honest with yourself in your business and actually have individuals around you that can complement those weaknesses. So when you know that you're not that good at actually getting new connections on the board, but you're very good at potentially keeping those connections and holding onto them, as you say, you latch onto that one individual, then it's very, very important to actually look at your company and your business and go, well, how do I actually get people around me that can fulfill the weakness that I've got, and my strength can actually be, okay, well, I need to then follow through and latch onto the individuals that were introduced to the business.
So how do you see Leapway growing from now? You've got yourself and Matt, you got your partner, Lazan.
Yep.
Do you identify any weak spots, or how do you spend the time to identify future bits to improve?
Yeah, so I mean, at the moment we're in aggressive growth mode. So the reasoning behind head of the head of processing and head of new business is because the team is growing really quickly. So we'll have a few more people come on fairly shortly. As I said, we're currently recruiting for the processing team. So definitely we're seeing the business grow into a full-fledged team in the HQ office, which is in Orewa, and then we've got a satellite office down in Papakura. So the advisor client or the advisor count I'd see in the next 2 years would be up to about 5 or 6 advisors. And then the processing team, we're definitely going to look at insurance administrator, mortgage administrator, paraplanner, and then just your normal admin back in. So yeah, definitely seeing the at the moment, obviously our weakness is that we don't have enough people on board. We've got people coming in the front door, and we have so much opportunity, and we need to now get the processing team to the point that they can really help and support the sales team and the new business team. And so envisioning that, we have the processing team setting up, which is the portion I'll be managing and overseeing, and that'll be based in Orewa. And then the sales team effectively will be managed by Matt. And so we've also split those responsibilities to go, he's responsible for managing the sales, because I strongly believe that you need to lead by example. So for me to be sitting in the office and telling advisors that they need to be calling people and they need to be doing BNI meetings and networking and all these type of stuff to get new clients and so forth, but I'm not doing that myself, or I don't lead by example. For us, it's very important that the values of the company is that each individual actually leads by example. So for instance, me also understanding the processing side and the weaknesses and obstacles, and then sorting it out and communicating that with the processing team.
And if you're in charge of that processing and efficiency, maybe automations part of the business, how do you bring in new processes? Is there any way or any improvements that you could suggest to other advisors just to save time and help get people through the door? Yeah,
absolutely. So we heavily invested in technology. So part of the processing back end, and one of the, I think the unique points of Leapway at the moment is that we've embraced technology. So we have systems on systems on systems, and that's all my forte and the things that I really enjoy. And this is a portion that I bring to the table, which I can teach to the new business side, and I can teach to Matt and to the sales team. What I would say is definitely look at working smarter, not harder. Get something that's very efficient. So we have automations on status updates for clients as they go through applications. We have systems that actually link all the systems together. So we've got our main brain and hub, which effectively is always going to be your first point of contact. And for instance, Trail as our actual financial implementation software is linked into the brain system or the main hub. And so you can click from that system back into Trail. You can click back into our team's client folders and the specific business fact finds and so forth that we're using. So what we've tried to do is, and the beauty about it is we're sitting on quite a few clients at the moment, and we've really pushed the boundary on managing those clients. But what it's forced me to do is implement specific systems to make that workload better. So as new team members come on board and new advisors, they obviously inherit all these systems. There's automations on when booking a meeting, the client's automatically reminded. There's a text message that goes out as a confirmation of booking. There's a meeting reminder one day before. There's a text message prior to the meeting. So there's no issue of no-shows. They have the ability to reschedule the meeting. We have
These are all just off-the-shelf products as well that you've...
Yeah, so what we've done is we've chosen specific products and then we've customized them back in what we want them to do. So the for instance on the marketing, on the automation systems, we've actually built in, as we change specific stages, there's communication fired out to a client.
So just to break that down a bit further, so when you move them through the pipeline or the Trello board type thing,
yep.
You move them from one stage to the next, there'll be an automatic email.
Yes.
That says...
Yep. So we've got the back end. So we've got a templated email for each individual in the business. For instance, myself and Matt at the moment, as we work with a client, if the insurance process or pipeline stage is insurance submitted, there's a beautiful templated email in the back that goes, hey, here's a confirmation that your insurance application is now submitted, and a few bits and pieces that are important, the importance of disclosure and so forth. And then as the underwriter comes back to us and says, hey, we need a bit more information, in a lot of instances that might be information you already hold on record, but we also then change the status in the pipeline to more information needed. There's another email that fires out to the client that says, hey, just giving you an update, your insurance application stage is now more information needed. Rest assured, if this is financial or medical information that we already have on record or can request from your GP on your behalf, we will do that, but we'll reach out if we need anything specific from you. So it's just keeping the client informed throughout the process, but not necessarily requiring you to do it, because the reality is that each and every of these tasks that you would like to do and you would like to keep the client informed. Number one, there's an issue of human error. We forget to do it. So we move it to the stage and we've got 15 applications open at the moment. So you forget to send the client a quick update of, hey, we need a bit more information. And I'm just quickly, we're requesting information from your doctor. And then the other issue is obviously being sustainable or standardized, having the processes standardized throughout the whole practice. That's our service level.
That's such a good point about communication and keeping on top of like each of your clients. Imagine those 15 applications. If you didn't have that automation in place,
yeah,
that right there, that's an hour worth of work just sending the same templated email. So how long did that take for you to set up that process? Was it a week's job? Did you set the task? It might be hard to quantify.
Yeah. It's a work in progress, and no, it's been months. It's definitely something that's been my little hobby, and I've been playing around with the systems in the back. And the beauty about systems and automations, and one of the pointers I can make to other businesses is that once you've created the automation, that's the templates. So you can actually, it started out as just a standard template that was sending a client a new client welcome email once the transaction was finalized. And then I actually thought about, I would like to send the client a few updates throughout the application. I don't want to just send them communication once the transaction is finalized. I want to keep them updated throughout the process. So yeah, it's been something that I've been working on for the last 4 years. And on and off. I mean, every time we have new processes and systems or new formats of doing specific transactions, I need to actually go back into, okay, well, how does this affect our processing? And thus the need for a head of operations or head of processing, because you then need to go and look at the implication of this is what we're doing with clients now, and that's going to require some more work on the automations to be set up. We need to create potentially more meeting templates, and also link it into the brain system, which is the main hub. But the most important for us was to actually create that main system that allows all these other systems to be used and utilized. So you're not jumping from one system to another when you potentially want to book a meeting, or you want to request a digital signature, or you want to create these automations flowing into, for instance, an automation system or a marketing system.
So how did you land on the marketing system that you use now? Because I know there's a few out there.
Yeah, I mean, effectively we inherited it based off an interaction with a company that specializes in marketing for financial advisors. So the system is called Active Campaigns, and it is pretty much one of the strongest systems out there. And the two that you always come across is Active Campaigns and MailChimp. I think the importance of choosing that specific system is reliant on what you want to achieve. So, for instance, our automations are going to the point that they have anywhere from 16 to 20 different steps in them. So it's actually growing a little bit in the logic and in the brain and the thinking of it. And when you look at these different systems, you need to really start investigating around the ability of those systems having that automation function and also how it can grow with your business.
So how many, if we think about the tree and its roots expanding out, would you have like a few in place where if client opens email but doesn't click link, do X?
Yes.
How do you map that out? How do you begin?
Yeah. So I think it ties back into, as I say, start small. So for instance, our logic in a lot of the instances will be specific field is changed. And once that specific field is changed, trigger this automation. Then the automation goes down the specific logic sections. Is the advisor Johan? Yes, no. Okay, yes, then go down this branch. Is the advisor Matt? Yes, no. And then go down that branch. What is the stage of the application? Then go down these logical branches. And then towards the end of these specific branches, it'll actually go into a separate automation. So then tying your automations together after the transactions has taken place. So for instance, an example of ours would be once we've updated the client's stage 2 policy issued, the client would get a confirmation of cover. And off the back of that, we'll have the client actually go into our new client automation, which adds the specific tags, triggers another automation. We send them a beautiful little new welcome email, and we also prompt them for feedback, because that's the important piece for us, is to get the feedback from the client around how they experience the service and where we can get better.
That's like so valuable. I imagine there's a few advisors sitting there right now going, oh, how am I going to build this out? I think just starting small, just getting one or two set up, getting more comfortable with it. Could even be, like you say, a feedback email that can be fairly easy to set up as an automation. I just speak to the trail support team if you're using it. But you can have that email go out maybe a couple of weeks after they've finalized the policy, or they've got their home loan, just saying, hey, go through this little questionnaire or leave us a review.
Yeah. I think the NPS system, Net Promoter Score, is an important one. That's sort of where we started off, is getting feedback around questions. I was kept well informed, that I got a timely response. I'm happy with the service. Would you recommend this service to family and friends? Those specific questions. Ours have changed significantly to the point that we are really pushing public feedback. So Google is our chosen review platform now. So yeah, absolutely. Start small, have that one automation, get it triggered off the system that you're using, the CRM system, because it should never be a manual process. If it's a manual step, you are going to forget about it. And I think the environment we're moving into, there's no time for little tick boxes around, okay, well, we need to send the client a new welcome email, because I think moving into the new regulatory environment, it is effectively, it's caused a massive change in our profit margins of the company. So you will need to do more. You will need to interact with more clients, and so you need to actually work on the sustainability of your systems and how that actually talks and that communicates with your clients.
And so, automations is one part to make your business more profitable.
Yep.
What are some other things that you might bring into Leapway to make it a more profitable business?
Yeah, I think what we did is we really drilled down into the niche. So we really sat down and focused on what sort of clients do we want and which clients we want to work with. We've ended up, given the service offering being business owners with potentially 1 to 2 investment properties and so forth. So when you also work with the specific clients that you want to work with on a regular basis, that will have a massive influence on your profit, because the transactions will also be the sort of transactions that you feel fit your business and your client or your company effectively. Automations is one. Obviously, all these systems cost, so you have to be very, very aware of. Once you go down this track, there's substantial subscriptions that you need to start making towards all these systems, and they're also linked onto per user. The beauty about these systems is that once you've implemented them and you've built them, they are designed to scale. and that's how you then effectively increase your profit or your turnover, whatever your goal might be for the company. And that's also the thing that we've tried to do is we've got the template, and so now it's time to really scale it up and bring in people that will look at this and go, I think this is really good. I just want to be an advisor, and I just want to be with people. And this is the feedback that I'm getting from other advisors that I talk to is, I can't be bothered with all this compliance. I can't be bothered with all these systems and stuff. So I just want to have a place and a home where I feel like I can focus on my client. But we've got all these nice little things happening in the background. So my clients are always super stoked and happy with the service offering. And that comes down from the value and the mission and vision of Leapway and how we want to implement it going forward.
Yeah, I think so many advisors are in that boat where it just seems like a mammoth task, not only just to run your business, but to prospect, deal with clients, improve the business, maybe train somebody up.
Yeah, I think it's, and that comes back to the thought process that I had around the future of the company. And so you really need to sit down and look at, well, if you are applying for your own financial advice provider license, and I know a lot of individuals have been granted their financial advice provider licenses to date, but I don't think that's the challenge at this stage. Getting the license is going to be easy. It's keeping it that's the trick.
Maintain.
And that's where the cost is really going to come in. So having all these hats that you need to put on as just a sole advisor, I think can become really challenging. And that was part of my thought process is also, well, as a financial advice provider license holder, I need to actually have an individual that has a locum cover and locum agreement in place, that if something happens to me, they can continue on with transactions. A simple transaction might be settlement of a mortgage on a Friday, and you become sick, and the settlement does not proceed, and there's cost to the client. So you need to look at those operational risks to the company, and this comes back to the other question you had around people that look at commission and the effect of commission on their business. That is an operational risk. You need to really sit down and look at the operational risk in your company and go, if I'm only receiving commission, what happens to this business if commission changes? And you need to change your company so that operational risk is minimized. And that's where we also implemented the fee-based service. And so I think going forward, having a single advisor and that business needing to do all the things that is required by the FMA to keep the financial advice provider license is going to be very challenging. I think it's doable, but it comes back to the question that you had around the burnout piece. Are we really able to do it? Why not surround yourself by getting people on board that can help you, that you leverage off, that you have these synergies with?
And one more point. When a prospect comes to your business, do you have any tools to pre-qualify them so that you know that you're spending valuable time with good clients? Is there an easy way or an efficient way of doing it?
Yeah, I think so. Obviously, we use Trail, so we've got a standardized process for each and every client that comes on board. So, for instance, on the insurance side, we will require them to complete the fact find and the financial needs analysis. I think at the moment we're getting a lot of pre-qualified leads already from our centers of influence. So they've already been pre-positioned to the service offering, and the need for assistance with either insurance, KiwiSaver, home loans, or the lifetime cash flow modeling service was already explained to them by somebody that really understands it. So that's also, again, we've tried to really work with these individuals that we have as centers of influence. Educate them on our service offering, and so that means that when they're sitting down with their client, they're effectively already pre-positioning it. So once they come to us, it's just actually going through the solution. What is the actual transaction? What do you need help with? Is it KiwiSaver? Do you need advice on fund choices, on provider choices? Is it a home loan restructure, or do you actually want to go through our whole service offering, which starts off with, let's potentially go through a lifetime cash flow modeling session and then implement mortgage restructures that actually facilitate the scenarios that you had in mind. Let's get the insurance reviewed if you haven't had a look at ACC Cover Plus Extra if you're self-employed, or just your current insurance portfolio, make sure that that's structured correctly. So these specific silos all tie together, but most of the leads that we definitely get at this stage are pre-qualified. So we we're just
You know
trying
they're
to
good
get
quality.
Yeah, we're just trying to get the transactions across the line and give them the solution that is the one that they really need.
Johan, thanks so much for joining us today. I think some of the points about bringing in a business partner as well as automations, I know a lot of advisors, it's that thing they want to do, but it's just a big ugly project in the background. So you might have a few people call you up and
Yeah.
pick your brains. But thanks so much for joining us today. I'm really excited to see the next journey that you take with Leapway. And I'm looking forward to seeing this being released as well.
Yeah, no, thanks a lot, mate. Really appreciate it.
Thanks. Bye.